Hey guys, it's Eric from foundersbeta.com, and I'm so excited to have Alex from Perch. Alex, thanks so much for joining.
Thanks for having me. Always a pleasure.
So tell us a little bit about Perch. I know you've been working at this startup for some time, but I'd love to hear about the backstory.
Yeah, I founded Perch back in 2018. Started out, it was essentially me and one contractor. We bootstrapped our way pretty fast and over a period of time to really find product market fit. Once we found it, then started kind of growing it out from there, hiring on revenue, and eventually hit a point where we needed to bring in outside capital to grow faster. So today we're a team of 20. We just closed our Series A round, and I guess we're firing on all cylinders at this point. So it's everything's chugging away.
Awesome. So tell us, how does Perch help the users, find the best mortgage rate, connect with the right professionals.
Yeah, so we see ourselves as the ecosystem really of real estate, and specifically our role in that ecosystem is as the financing component.
Right.
So on the mortgage side specifically, so we try to essentially help the user simulate what their path to home ownership looks for, because we're essentially trying to solve two problems. So the first one is, how do I get a first-time home buyer into their first property more effectively? Um, Everyone's got a different blocker, whether it's income, down payment, qualifying credit score. It doesn't really matter. Everybody has this, like, one of those blockers typically. So
Mhm.
we're helping them find a solution that better fits their needs. So our system's able to essentially simulate what the best path for them looks like. And then from those options, we're then able to find the best rates and options that are available to them in that path. Um, so I think where we take it a lot further than the traditional, if you go into your bank branch or if you chat with your mortgage advisor, is we're able to actually quantify each of the options. So are you better off going B, refinancing out to A? Or are you better off going A plus private, B plus private? Like, essentially, you just keep renting. We're able to really look at all of those paths and help somebody put an objective number to it, rather than just focusing exclusively on here's the lowest rate, even if it doesn't meet their budget, doesn't help them get the house that they want. And essentially, we're trying to get away from that and looking more into
Right.
what creates the most value.
Right on. So I saw Perch has a number of tools to help aspiring homeowners. Can you talk about some of the tools that you built?
Yeah, so our biggest, our I guess our what's the way what word I'm looking for? Our breadwinner, or our most
Right.
popular tool
Right.
is the Pathfinder. So the Pathfinder helps people compare all mortgage options. So
Hmm.
where this differs significantly from, let's say, a rate comparison site, is a rate comparison site typically will just show teaser rates. So it's like, hey,
Right.
here's what you
Right.
could get. But we actually have them run a simulation of, is this a renewal, a refinance, a purchase? Where are you thinking of buying? What's your purchase price? What's your down payment? So people just put in 5, 6 inputs, and we're actually able to underwrite their deal to return what options they'd be eligible for. So it's
Right.
not rates as low as, it's like, here's your rates. But then where we take it further is we also then are able to compare everything between each other. So should you go fixed? Should you go variable? Do you go 3 year?
Right.
Do you go 5 year? What are the terms like? How punitive is it to break those mortgages? So things like that, is we help them, the users, essentially compare each option to make the best choice, and make it so they can compare them against each other.
Right
Some
on.
of the other tools we have, things like closing cost calculator, qualifier tool to see how much you can essentially qualify for, a penalty calculator that's specific to your lender, so you can estimate how much it would cost to break your mortgage,
Right.
rent versus buy, so quantifying how much are you better off buying versus renting if you're kind of on the fence of if you should go for one over the other. We have a bunch more, but really it's kind of all those injection points where people have to make that decision of, what should I do, is really where we try to help them make that decision.
Right. Because I mean, getting a mortgage online is such a messy process, right?
I mean, yeah, it depends who you work with, but essentially it's because where I guess it's less messy than traditional processes, it's more
Right.
convenient.
Right. Right.
So if you're able to, because I guess the biggest thing is when you do it in person,
Mhm.
your outcome is solely based on the quality of the advice you're going to get from that person, which
Right.
could vary drastically depending on the level of experience that person has. So our mentality is that we're trying to basically take the combined knowledge of our mortgage advisors, put it into an algorithm so there's more consistency in what
Right.
your outcome is, but also just in the amount of options that are evaluated. Um,
Right.
so, for example, our system can underwrite over 1,500 mortgage offers in less than 20 seconds. Nobody at the branch can do anything
Right.
close to that. So it's really just a matter of looking more comprehensively at all the options and then returning the best one.
Right, and then putting the user into the power position, right? Giving them more
Yeah.
data, right?
Yeah, well, because then if you have an objective way to compare everything, it's
Right,
not, you're not blindly just relying on somebody else's opinion. You actually can see why one is better than the other. It's not
right,
like you have to pick our number one. You might go with our number three because that's
right,
just something that better aligns with you. Because there's the
right,
quantitative and then there's the qualitative, right? Some people won't pick variable rates, even if it's by far better than the current fixed rate, because they just don't
right.
like the thought of their mortgage payment changing. So that's where, people can have that overlay, but we at least give them the info they need to make that decision.
Right, right on. So talk about going back to Perch now. So you recently raised your Series A, so massive congrats on that.
Well, thank
Um,
you.
yeah, so especially in this climate. So maybe talk to us about what was it like raising in this environment?
Yeah, I think when I started, so this was actually like a 6 month labor of love. So it's not like it happened overnight or anything.
Right, right,
So I actually started fundraising for this back in April. And I remember back in April, it was radically more optimistic, like in the market as you're kind of feeling it out. So I
right,
had a long list of interested parties, like higher valuations, things like that of like what can be expected and larger funding amounts.
right,
And then markets, I think, took from a capital standpoint, I'd say May, June is really when things turned for like I'd say much more pessimistically.
right,
Um, so valuation expectations had to come down, amount of capital raised had to come down. So there's a lot of things that you just had to kind of adjust around. So the
right,
timing, you can't ever know for sure, like, is this going to be the perfect market to raise in? But we needed
right,
capital to grow.
right.
So you got to do what you got to do.
Right, right. So what advice do you have for founders like raising right now? Like, what should they look into spending more time on it, or what are your thoughts?
Yeah, so I think the first thing is to be realistic. No one's going to pay you 20 times revenue based on an optimistic growth forecast. So
Right,
being able to adjust your projections based on what the macros look like that's the first thing. The second thing is I still remember like even 2 years ago when you chat with
right,
investors, like the growth at all cost model of just I want to see massive revenue growth and I'm expecting you to not make money for a long time has evaporated.
right,
There's a huge emphasis now from investors that want to see a clear path to profitability. So typically they want to see it within 12 to 18 months. If you're already profitable, even better. Um, I'd say there's definitely more of a premium on profitability than there was before.
right,
Assume it'll take you at least 6 months, so it's not going to be a
right,
quick round by any means.
right,
You should also consider for those that have solely raised equity or haven't raised anything,
mhm,
mixing in debt might not be so bad at this point because
right,
it's non-dilutive and it essentially can help you mitigate the downside of if you have to do a down round or things like that.
mhm,
That is something that can help. And then the other thing is to also close commitments instead of there's a tendency sometimes to just have it all remain open until everybody has committed. In this market, it just takes a lot longer to get things organized and to get
right,
get capital out the door. So we just started kind of closing it in tranches as we went, just so it's like you have a firm commitment, and then there's not the spook effect of everybody's waiting for everybody else to come in. But if nobody goes in first, nobody else is going to go in. So you want to kind
right.
of just nip that in the bud and be like, no, I have commitments, they're here.
Right, right. So getting those early commitments is the key, right?
Yeah, because then until then, like you actually have nothing until there's any
Right,
until any of them
right,
have funded. Everybody else is just assuming everybody else will go in, but no one wants to be the first.
right.
So
Abs-
having ideally your existing investors kind of lead the charge,
mhm.
or your lead will help you tremendously.
Absolutely. So talk about empowering Perch users on the platform. How does the whole funding help with your vision as as you build the whole ecosystem here, right?
Yeah. So sorry, just to confirm. So how do we help users as within the ecosystem?
I mean, how does the funding help in terms of like bringing more,
Oh, got it. Got it.
more development, more, more features? I think that's what I saw on the press release. Yes.
Yeah, okay, no, now I got you. So basically, right now, our platform. So I'd say last year, just from a mortgage jargon standpoint, you essentially have like prime/A clients, and you have B alternative or private. Those are like kind of the three buckets of mortgage volume. So
Mhm.
historically, we've done more than 80% in the prime bucket because that was just kind of our bread and butter. In this market, we're seeing so much more demand for alternative or private lending products, just as a
Right.
result of where the environment is. So where this funding is going to help us is one, we're going to expand essentially the breadth of our algorithms to
Mhm.
be able to factor in not just predominantly A, but also B and private mortgages to look at like essentially combined solutions on an automated basis.
Right.
Um, we're also going to accelerate a lot of our scoring algorithms. So essentially, one of the key things we want to offer our realtors and our wealth advisors or any other referral partner is the ability for us and them to have an idea of where should I be focusing my attention.
Right,
So
right.
essentially, what are the highest quality leads? Who are people that actually need your input right now, instead of just the generic, email all, hey, you might save on your mortgage versus like,
Right.
here are the people that can save on their mortgage, and we're only going to go after them. So the personalization component of it is really big. Um, and then by funding this, we've also have our brokerage, but then we have our lending arm, Perch Capital. So this gives
Right.
us capital to expand that side of the business as well, to offer solutions. Because what's really interesting about our situation is that we have a large data pool as people build plans, and
Mhm.
we know exactly what's blocking them from being able to
Right.
get into the housing market. So if there's no product in the space that lenders offer, we have an opportunity to start looking at like, well, do we just create it ourselves? So we started to do that with a
Interesting.
lot of success to unblock people immediately and get them in the market without taking on undue credit risk. So it's really essentially enabling us to offer solutions that somebody can't get anywhere else, which is to us one of the key things that you need in a competitive
Right.
advantage.
Absolutely. So offering the customer the whole journey, right?
Yeah, exactly. And then
Right.
working hard with our realtor partners to make sure they're working
Right.
with the right professionals, wealth advisors. We've signed a lot of referral partnerships with things like, home and auto insurance, renovations.
Amazing.
So we're really big on bringing in those partnerships and building that ecosystem. So it's not just, hey, we'll help you buy your house. It's
Right. Right.
once you buy it, what can we help you with after? So keeping them in our life cycle is really where we're investing all of our all the capital is really just going into
Right.
like how do we add more value over their life cycle.
Amazing. So talk about, being a first time home buyer. We may have lots of even founders on Founders Beta looking to get a home. So what are some advice you have in terms of just getting your first time home?
Yeah, so right now there's a lot of I always find it's funny. It's like rampant pessimism. When interest rates are low, people talk about like the headlines are all about how expensive homes are. Then when
Right.
prices drop, the headlines are all about how expensive mortgage payments are. So I think it was highly unrealistic for people to think that home prices would fall as much as they did without interest rates moving accordingly.
Right.
So it's kind of like you have to pick your poison, right? You either are going to get more expensive payments or more expensive prices. Like it's just like it's hard to have both basically.
Right. Right.
So I ran some quick numbers actually before our call. So somebody
Sure.
who is
Yeah.
buying an $800,000 home in Q1 of this year, which is arguably the peak of home prices, um, would have been paying a monthly mortgage payment of about 2,500 a month. So every year they're paying about $16,000 in interest. So now that same $800,000 property today is worth about 650. So their mortgage payment at a 5.5% interest rate, so plus three basically from what they would have had in Q1, is 2,900. So that's roughly a $400 increase in their monthly payment, which is high but not
Right.
crazy by any means.
Mhm.
And every year they're paying 28,000 in interest instead of 16. So when you actually look at that delta, you're basically paying an extra $12,000 a year in interest, and your monthly payment is $400 higher.
Mhm.
The average home price increase you would need on that $650,000 property is less than 2% for you to make more than you would have otherwise.
Right.
Um, so when you look at it that way, essentially of like I'm buying an asset at a lower price and I'm going to be paying a higher price to essentially maintain it,
Mhm.
you're hoping that the price gains will essentially compensate for the extra interest you've paid.
Right.
And it's also important to remember that the outlook is only that rates are going to stay pretty elevated for the next year or two tops, and then
Mhm.
kind of start to revert back to the mean.
Mhm.
So it's like a temporary pricing increase. And then it's when you look at it objectively, like what's your alternative? Well, I'm going to keep renting. The average rent for a two-bedroom apartment is about $2,750, which is only about $150 less per month than the mortgage on the
Mhm.
$800,000 property. So when
Right.
you kind of break down the numbers that way, it becomes pretty like it still has a good use case. And I mean, don't take my word for it. Run the rent
Right.
versus buy
Mhm.
calculator. It'll
Right.
tell
Right.
you the same thing.
Right.
Um, but yeah, so I think people have an opportunity to get in at an arguably low price that they wouldn't have
Right.
had access to before.
Mhm.
So yeah, it's just about looking at like what can you service, what makes sense, and not just focusing on the perpetual pessimism that keeps trying to find a new scapegoat
Right.
of like why you shouldn't get into housing.
Right, right. That's right. That's right. So talk about, as we speak today, of course, there's going to be some rate hikes, So where do you see the housing market, as we head into 2023,
Yeah. So I think the outlook, I mean, we actually posted this, is like we're seeing another potential hike in December.
Hmm.
And then, or sorry, November, I think it's November actually. So one more, let's say in Q4.
Right, right.
And then potentially nothing for the rest of 2023, or maybe a couple small ones in the second quarter of 2023.
Hmm.
So where we see that kind of translating from a housing market outlook standpoint is that we think basically we're going to see continued reduced activity. So number of sales, a lot of people just are staying put. They're not listing their home. So if they're not
Right.
moving, they're not buying. And then if they're not listing, that means no one's buying their house. So essentially it has a domino effect of just reduced transaction volume. Um, that's going to put downward pressure, or at a best case scenario, flatlining of home price growth. And then where we see the uptick is, the reality is monetary policy takes time to filter through. So the rate hike today is not going to impact inflation tomorrow. You know what I mean?
Right, right. That's true.
So by the time these, like the sheer size of rate hikes that we've seen, it'll take time to trickle through into the economy. And by the time that like a lot of these geopolitical risks hopefully recede,
Right.
and then we see the essentially inflation start going the other way, we should then see the Bank of Canada start to cut rates, which is really what most economists expect as well, either later next year or into 2024. So our prediction is that as the outlook for monetary policy shifts from hikes to cuts, that should prompt a ton of people to get back into the housing market before home prices start to kind of accelerate in light of that new information. So we think that's going to be Q2, maybe Q3 of next year is where house prices pick back up.
Right on. So, so for our audience that want to learn more about Perch, what's the best way to go about it?
Yeah, so basically our website is myperch.io. You can go on, you can try any of our tools. You don't have to create a profile. It's all free to use. Create a profile if you like what you see. Because basically how the model works is the tools are generic in the sense where you have to enter inputs and it'll give you something that's specific. But when you create a profile, you then add your information, and our systems and advisors can then actually customize a solution that's specific to your situation.
Mhm.
So it's really kind of like, the try before you buy, but then if you want to get the real answers, just create a profile. It's free to use, and it doesn't cost anything to get a plan put together for you.
Perfect. Well, Alex, thank you so much for joining today and sharing your journey with the with Perch. Much appreciated.
Yeah, absolutely. Thanks for connecting us, Eric. And yeah, look forward to catching you up on how I guess the next milestone that's coming up in 2023 then.
Absolutely, absolutely. Thanks again.
All right, cheers.